Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to start by quickly shouting out Sheepherder. Sheepherder made the theme tune yesterday that we featured in yesterday's video, so a massive thanks to Sheepherder. Also, something I should have done and I didn't was link the song, so I'll put that in the pinned comment today. I'll put it in the description. So if you want to go and listen to this song, which a few of you said you did, then yeah, click the link in the pinned comment. Yesterday, we had some macro data come out, okay? ISM manufacturing PMI came in at 48.7 versus the 49.6 estimate and below the previous month. Now remember, for this kind of metric, we're looking at anything above 50 is indicative of an expanding economy and anything sub 50 indicative of a contracting economy. So again, fits with this idea that growth is seemingly fizzling out slowly but surely. And we also had the Atlanta Fed Q2 GDP estimate plunge down to 1.8% from 2.7%. It was at 4.1% only 2 weeks ago. So this is actually the perfect analogy for this data, because you notice this thing here, is it the Coyote or the Roadrunner? It's one of those two. It runs full speed until it runs off a cliff, right? And then it ends up at this point right here where it is suspended in midair with no ground below. And this is very much what tends to happen with these surprise hard landings and surprise recessions. Everything seems fine until suddenly you find yourself suspended midair with nothing to hold you up below. And that's when the fall can happen very, very quick, and it can catch a whole heap of investors and traders offside. So as always, I am not suggesting that any second now the floor's about to fall out. I'm not suggesting that this is a doom post. As always, we'll use the charts, we'll wait for true technical breakdowns, we'll wait for confirmations via failed daily cycles. But if this doesn't change and it doesn't change quickly, then we are likely going to find ourselves right here expecting a hard landing in the not too distant future. And so for me at least, the very big question at the moment is, well, there's two questions actually. Number one is Bitcoin going to take part in a rally very, very soon? And number two is, if it doesn't, then can Bitcoin decouple whilst the stock market is putting in a blow off top and potentially about to crash as we enter this recession, as we enter this deflationary bust, right? In fact, let me pull up a chart so we can be quite clear, okay? As you've probably seen me do a million times before, I like to use 3 increasing angles of steepness as my structure for a blow off top. So some kind of chop, daily cycle low, and then perhaps we will even get a steeper angle into this blow off top. Now, if we do, and it is still to be determined, but let's say we do something like this, okay, climb up here, blow off top, and then we break down, and Bitcoin has not taken part in that rally, then, like I said, the question becomes, does Bitcoin just continue to trend lower? Does it crash with stocks? Does it crash with risk assets? And thus, is the top already in for Bitcoin? Or does Bitcoin, in the face of this, if it doesn't get going immediately, right, if we don't see Bitcoin pump very, very soon, then assuming this plays out for the stock market, do you think the stock market is capable of crashing like this and that money just rotates into Bitcoin? Can Bitcoin continue perhaps to chop around for another month or so, even 2 or 3 months, whilst the stock market blows off? And then do we see a rotation? Do we see this whilst the stock market is doing this? I'm not convinced we see that, personally. I don't think Bitcoin has enough of a market cap to be treated as a risk-off asset yet. My assumption has always been that we'll see Bitcoin eventually be treated as a risk-off asset, as the ultimate risk-off asset, but not until the market cap is nearly tenfold what it is today. So it's always been my assumption that we probably would have this blow off top for Bitcoin as well as the stock market. Then we'll have to trend down into some big bear market lows at the end of 2026. And then from there, we get the super cycle out of that 2026 bear market low. Once we get up into these massive numbers and we've got closer to a $10 trillion market cap, that's when I believe Bitcoin will actually be treated as a risk off asset. But again, the question for me is Bitcoin, one, going to fire off soon? And number two, if it doesn't and the stock market does, leaving Bitcoin behind, do you think it's reasonable to assume the stock market can have that breakdown, right? A blow off top and a breakdown, and then Bitcoin finds its way to continue doing Bitcoin things? I would love to think that's the case. Don't get me wrong. I would absolutely love nothing more than to see Bitcoin come through as the ultimate risk off asset. I would love nothing more than for the market to start treating Bitcoin as the ultimate risk-off asset. I would love nothing more for it to decouple and trend its way up to the multiple hundreds of thousands of dollars over the next 18 months or so in the face of the stock market and all these other traditional finance assets selling off violently. I would absolutely love to see that. But personally, as much as I love Bitcoin, right, I just don't see it, unfortunately. I'm just being as honest with myself and as honest with you as possible. Let me know in the comments if you think we can see it. But I do think, unless Bitcoin starts to fire off pretty soon, right, especially if it doesn't and the stock market does, then I think we could be in a world of trouble for Bitcoin. That's just how I see it. And again, I would love nothing more for the stock market to do this and Bitcoin to do this, okay? That would make my day. That would make my year. I would be so, so proud of Bitcoin for doing that. But I'm just not convinced we're at that stage in life yet for Bitcoin. So as I said, let me know what you think. There are some positive hints under the hood for Bitcoin that we could be about to get going soon. And that's what I really want to see. What I really want to see is Bitcoin do this whilst the stock market does that. And then we can say, okay, everything is kind of operating as expected. That's kind of what I expected for years now. And if this is what we get, happy days. So as I said, I am still looking at these hints and hoping and praying that that is what we get. And as Tony the Bull points out right here, okay, we've got this divergence between the oscillator supported by perhaps having done the 3 into the 4, looking for that final leg into the 5. Okay, that fits my idea with the cycles, of course. And we have actually seen this twice before for Bitcoin. You can see here the same divergence as we went 3 into 4 before 5. And again, the same divergence as we went 3 into 4 before 5. So there are still some hints. There are still some glimmer of hopes as far as I can see, right? We could still be looking for that final push higher. Again, if that occurs with the stock market blowing off, then everything is going according to my base case expectations. But like I said, I am starting to get increasingly worried that if the stock market starts firing off whilst Bitcoin is doing this, then I think we could be in a lot more trouble than most people, including myself, really thought was possible. I also think it would be quite a weird situation if that happens, because let's assume we get the stock market blow off, okay, and do this, and Bitcoin goes sideways before crashing with risk. It would also be a very strange situation where a bunch of retail sold the top, okay, and all of the traders and all of the people that have been around for a long time are still holding the bag, expecting higher prices. So that would be, the first time in my career I've ever seen that. But as you know, it's a market and absolutely anything and everything is on the table. Some more encouraging hints from the market and subtle tells that we are probably due a leg higher is again here a fantastic chart from Tony the Bull. The Bitcoin 6-week versus the money supply, this is versus M1 again, has just pushed beyond the +3 standard deviation on the Fisher transformation for only the second time in history. Okay, so here it is at the hard right edge, happy days. Last time it happened, very good things happened to the price of Bitcoin walking forward. So again, if we can see a repeat of something like this and this, happy days, that all would make sense. But I do think it's time to start to be on guard a little bit, just in case what I said earlier about the stock market moving up whilst Bitcoin keeps doing this. I don't think that is a situation we should be hoping to see personally. I get a lot of questions. Camel, where's the liquidity going to come from for a blow off top? What if retail doesn't come back? As you know, I've been saying over and over again, the truth is retail has never mattered, okay? Retail doesn't have the money required to generate liquidity to let the big players out. It just doesn't. That's just retail has never mattered. But one place we could see the liquidity show up is in the form of Fed balance sheet expansion. And is Fed balance sheet expansion the way to solve this problem? This is clearly a major problem, and printing money to buy assets to put them on the Fed balance sheet would certainly be one way to, at least in the short term, patch these holes. Of course, if the Fed does move back to QE, traditional QE, which is printing money and expanding the balance sheet, Bitcoin and risk assets will indeed have the liquidity to move into that blow off top. Whilst I'm here, quite a few people keep asking me what my opinion is in terms of what about these banks? How do we exit, say, Bitcoin or other risk assets and hold cash when clearly the banks are in a bad state? Is it safe to keep your money in these banks and so on and so forth? The absolute truth of the matter is, I don't know. I don't really trust banks personally, but I am going to be sat in this exact same position. I will say this, it's not in my expectation that all of these banks blow up and go to zero and the FDIC doesn't pay out this cycle. I think that comes much later. But also to answer this question of where do you hide, can you trust the banks? Well, it's entirely up to the individual, right? Allegedly, these banks in the UK are insured up to 85,000 per depositor. And I think in the US, it goes up to $250,000 per depositor. So Do you trust the insurance to pay you out? Do you trust this Fed balance sheet to bail you out in the initial rounds? I know a lot of people say, well, what about stable coins? You do you, right? I personally don't like stable coins. I think they're just as easily seized and freezed. There's also other risks attached to them, such as regulatory risks, depeg risks, hacking risks. The list goes on. Physical gold and physical silver is one way to carry no counterparty risk, but it will not be immune from short-term volatility. It's also not very liquid in large quantities. It's also not very easy to store. If you're the sort of person that's sat on 10 or 15 Bitcoin and that's what you're looking to exit, well, are you going to want to hold 10 or 15 Bitcoins worth of gold in your property at home? Probably not, right? So, I mean, it largely depends on whether you have the facility to store it, whether you have multiple properties, whether you live in a high crime area or a low crime area, whether you have a trusted support network of brothers and family around you that you can trust to, make sure the gold doesn't go missing, or you can, let one person know where it is and they can make sure that they'll hand it over to your family should the worst happen or something like that. You have to think about every possible scenario and then do what is right for you. So I wish I could give you an answer and say, oh, the banks will be fine, the FDIC will pay out, as long as you've got less than $250,000, you'll be fine. I wish I could say that, but the truth is I don't know. For me personally, I want to spread any fiat I have to hold throughout as many different avenues as possible. Of course, the problem becomes harder the richer you are. So if you're trying to hide tens or even hundreds of millions of profit outside the system, that's going to be significantly harder than if you make $5,000 or $10,000 on this bull run. Okay, it's going to be much easier to, $5,000 or $10,000, you could probably keep it under your mattress, right? Under your mattress in fiat. Again, that's not risk free, because what if they move to a cashless system? So you have to think about every possible outcome. Unfortunately, like I said, I don't have the answers. I have an idea for where I'm going to spread my assets and my wealth during the deflationary bust, should I be right about that call. But as always, I like to say one day at a time. We like to focus on, let's first of all see if we get the third angles come in. Let's first of all see if we get the big push, okay? If we get that, then we can say, okay, things are going according to plan. Let's look for an exit. And then the focus will be on, can we sell the top, right? Because that's super important. There's no point bag holding, right? You got to figure out how much you want to take off the table, if not all of it. Then we can sell it. Then there'll be taxes to pay. And then assuming we enter this big bear market, not only for Bitcoin, but a deflationary bust, global recession, then we can talk about hiding. But there's no point in doing all this preparedness right now if we're not even going to have a blow off top, right? If we're not even going to have a recession, if there's not going to be a hard landing, if there's not going to be a deflationary bust, then we can just waste energy all day talking about how to hide in leveraged long-term treasuries and physical metals and offshore accounts or property or whatever you're going to use. It would all be worthless if what is ahead of us is the Raoul pool up only until the end of next year at least, right? Infinite liquidity, infinite debasement, and a 30, 40-year bull market ahead. Absolutely not what I think is the base case, as you know. But again, for all we know, that is what is in play. And if that is what's going to happen, then why are we planning for a bust, right? Let's, like I said, focus on one thing at a time to see if we get the squeeze. If we get the squeeze, focus on selling the top, paying some taxes. And after that, of course, the channel will switch from the base case hypothesis of the melt up in the left translated cycle to how to hide from a bust, how to hide in a recession, and what I am planning to do to protect my wealth during such times. So I hope that answers a few of your questions. I know I get those questions a lot. Elsewhere in the charts, okay, we've got the dollar, the Dixie, the dollar basket, kind of breaking down, right? So far, so good. Probably looking for a daily cycle low. We are getting late in these daily cycles, or excuse me, the weekly cycle. We're expecting a weekly cycle low soon. So any bounce out of here may well be quite violent in the not too distant future. For now, though, it is working on breaking down. And all the while it's working on breaking down, that opens up the possibility of a sharp final push into a 3-year cycle low. So I'm keeping a close eye on that. Notice how the yields are coming off, okay? Why is this so important? Let's grab the 2-year. Okay, look at that. Look at the 2-year yield. So again, it's got work to do. It needs to take out these lows. But if this is what's coming, okay, if you know, you know. Tell that to the bond market. If you don't know, go back and watch the video from the weekend or stay tuned for the one that's coming this weekend. Again, tell that to the bond market, okay? Significant shifts occurring right now. Meanwhile, the stock market experiencing a bit of chop, right? Lots of wicks, lots of sharp shakeouts in the morning, followed by strong recoveries into the evening session. But so far, objectively speaking, closing multiple candles back above this prior all-time high level. That fractal I keep pulling from back here says that we're actually not doing anything at all out of the ordinary. Keep in mind, when I say that, this is not even blow off top or melt up stuff. This is just a normal daily cycle behaving as it did all the way back here, okay? So nothing out of the ordinary whatsoever going on at this moment in time. Once we find this daily cycle low, I expect to see that third angle come in. Of course, if we don't, something else is going on. And as ever, we'll keep checking in and taking it one day at a time. For now, though, like I said, it's behaving like a normal cycle. It's not even behaving like a blow off top just yet. It's behaving like a completely normal cycle. So this right here is just normal S&P things. Similar deal for the NASDAQ, waiting for that cycle low though, going to get to full exposure. Probably even going to be thinking about adding positions to the S&P and the Dow, moving stops up if we can get some kind of setup out of here. Probably think about moving the stop up underneath that low and adding another position there. And the Dow Jones, mixed messages, right? Is this breakdown, retest, possible resumption? If so, that could spell some tough times for the Dow Jones in the not too distant future. However though, V out of here and find a cycle low and keep going, then again, nothing is really out of the ordinary. Russell 2K, boring everyone to death, but it's still above all the supports, so long and strong continue to push there. Gold is looking for a cycle low. It possibly has found it. We're going to find out. I think this cycle is bottoming in the next couple of days, and then we should see a push up. Then once we've seen that push up, we'll be able to know whether or not this is a real, truly strong bull market, or whether it's going to be something like this and then roll over and die, in which case we'll be locking in profits across the board. I'm noticing silver back below that $30 level. Okay, that is not a good sign. If it can close multiple candles below this $30 level, then that is not a good look for silver. Objectively speaking, the cycle should be bottoming in the not too distant future, the next few sessions. So if we can get something like this and then a reversal, okay, happy days, long and strong there. Bitcoin can't get above these critical levels, can it? Can't get a decisive break above 69 and 70,000 bucks. Again, under the hood, the signs are there to say we maybe have a shot at this. I don't really think I need to say anything else about Bitcoin. We kind of already covered Bitcoin today. The last thing I wanted to show you was oil, right? Now, the reason I want to show you this is, there's a number of reasons, but this is a really good illustration of how, despite experience in the markets, despite being able to call trades out, show them on YouTube, public invalidation levels, right? It never gets easy. And you can see that here. For those of you that have been following me for a while, you know that when I was up here, I was saying there's no way this thing's about to break out and go to multiple $100s a barrel. Everyone was saying there's war in the Middle East, there's this reason, there's that reason, inflation's going to be sticky, this thing is guaranteed to break out. And I said, no, the sentiment is completely one-sided here. We're going to roll over. And then we did indeed roll over. But notice how I didn't short it, right? Then we got a breakdown and I said, no, we'll wait for a daily cycle, some kind of trap, and then we'll short it. And I still didn't short it, right? And now here we are thinking about breaking down again. And I still have not executed a short. So the reason I'm bringing this up is twofold. One, I always will keep it real with you, right? I'll always show you exactly where I'm right, where I'm wrong, the invalidation levels. I always will continue to try to uphold the gold standard of trading on YouTube. So that means when I get a trade right, you'll see me get the trade right. But when I get something wrong, you'll either see me pay the stop, or you'll see me like this, point out and say, just because you're seemingly good at trading, just because you've been doing this forever, does not mean you're immune to being gun shy, being unable to execute at a high level. This trade right here is a fantastic example of how you can be good at TA, right? You can know what you're talking about. You can gauge the sentiment extreme and take the other side, but still not pull the trigger. And thus, all that TA is worthless, okay? If your discipline is out of whack, if you don't have the discipline, if your mind and emotions get in the way of your ability to execute on a system, then even though you got the call right and the direction right, like I did right here, I still didn't make money out of this short, right? So am I thinking about getting short in the not too distant future? Maybe. Okay, but something about this has just had me off guard the entire time. And again, this is just how trading looks in the real world, okay? Sometimes it's nice and easy to find a cycle low and say, yeah, everyone's too bearish, weekly cycle, let's get long. But other times, despite the experience, despite the confidence to call the positions out, make them all public, including the stop loss levels, you can see that it actually never gets easy, okay? No matter how good you are, no matter how confident you are, no matter how much experience you've got, this stuff never, ever gets easy. So you must always put in the work. It's a constant learning and growing process. In here, right, I still need to figure out exactly why I couldn't pull the trigger here. So even after all this time and all this introspective work, something in here has left me to miss this trade, even though I was one of the very, very few people to get the call right back here. But as you can see, getting the call right and getting on the right side of the trade are two completely different things. So what to do now? Well, we could maybe YOLO in here, okay? That's one option. We could easily let this thing go and just say, well, sometimes you miss them. But the most important thing for me is to do the introspective work and try to figure out what it was about this setup. Why is it that I couldn't pull the trigger when you see me execute so many other trades with such confidence and fluency? Why is it that oil scared me? So that's something I need to work on. That's something I need to figure out if possible. And again, the reason I'm showing you this is because this is a fantastic example of what trading looks like in the real world. It's one thing for me to come on here and say, look at my profit, look at my open profit, or look at this long that I took, look at that long, right? But the reality is, okay, sometimes your TA can be on point and you still don't make any money. So again, trying to uphold the gold standard, trying to have full transparency here, trying to show you exactly what trading looks like in the real world, and most importantly, trying to show you that even when you've been doing this as long as I have, trading is never easy. It never gets easier. You are always against yourself. You are always against your own human psyche and your own human emotions, which are hardwired to make you lose money in the markets. So do I eventually get short oil here? I don't know. Do I let this one go until I figured out exactly why I couldn't pull the trigger, why I was so gun shy? As it stands, I don't know. I do know, objectively speaking, we're getting pretty late in the weekly cycle, which makes me think there's possibly a weekly cycle low in the not too distant future. And out of that weekly cycle low, we would expect a good couple of weeks of bounce and relief. As it stands, I'm still gun shy and I still have no idea why. So I'm probably going to get out of the way of this, because one thing I have learned is if you're not got the confidence, you don't want to be saying, oh, screw it, I'll just go in, right? I want to just maybe step back, let this one go, and maybe just see if we can find something else to trade in the meantime. But like I said, I hope you appreciate the real world example here. And like I said, the main message here is it never ever gets easy, okay? You have to be willing to come into the market every single day and put in the work and the study and the introspective work every single day. Of course, if you do that with a primary focus on risk management, you can, of course, make this a very, very successful career, giving yourself everything you ever dreamed of in life. But make no mistake about it, this is probably one of the hardest ways to make a living. There is a million ways to make $1 million, and this is by far the most difficult. So choose your poison wisely. I'm your boy Camel. I hope you found value here today, and I'm going to leave you with the guitar solo from the theme tune of the channel. Until next time, take care from me. All the best. Cheers. Bye.